Hey everybody, this is Jason Foreman with your weekly real estate market update. I'm a real estate agent in Los Angeles. However, this update is not just for Los Angeles. This real estate market update is for the entire United States. The biggest question that I'm getting lately is when will home prices come down? And there are a few things that may help home buyers in the future. I wanted to take a look at it and show you guys. Please let us know what your thoughts are in the comments down below. So first thing we're looking at are interest rates. Interest rates have been historically low, 3% and below. Basically, when people have a low interest rate, they usually use a loan to buy a home, and the lower the interest rate, the lower the monthly payments. And that's a good thing. However, when people can borrow more money for less, then the prices of homes go up because people are more capable of buying more homes. And lately, what we've been seeing, especially with the financial aid, the stimulus checks that we've been receiving, a lot of people have been getting a lot of money. And that's good. People are getting help. They're getting financial aid to get them out of a bad situation. However, there is a negative side to that effect, and the negative effect is inflation. And what basically inflation is, there's a lot of money that's been printed to give to people for financial aid. There's a lot of money in circulation. And like I said, that's good. However, the bad side is that because there's more money in circulation, it is worth less. So to combat that inflation, what the Federal Reserve does is they usually raise the interest rate. So right now the interest rate is really low. At the time of this video, even below 3%. That's historically low. It's really strong. However, over the course of the next year, interest rates are looking to go up to help combat that inflation, to make sure that everyday cost of living is not difficult for everybody, and that in turn may help soften the prices of homes. Real quick, you guys, please like this video. That will promote this video out to more and more people who can use this useful information, especially in a time like this. Don't forget to subscribe to this channel so that way you keep getting these updates over and over again. And if you're watching this on either Instagram or TikTok, go ahead and click the link in my bio, and that will take you to the link to my YouTube channel. I cannot post the full video on TikTok and Instagram, so you guys get a little bit of knowledge, but you want to get all of the useful information by seeing the full video on YouTube. Thank you guys for that. Factor number 2 that may help soften the prices of homes are forbearances. A lot of people are in forbearances where they have a financial difficulty due to the pandemic, and they've told the banks, hey, please hold off for 12 months. We're not going to make our mortgage payments for 12 months due to an unforeseen financial difficulty. That got extended another 6 months for a lot of people. That's been a piece of the puzzle that's made home prices so high, because people not selling their home, why would they sell their home if they had a financial difficulty when they could just simply not pay the mortgage for 12 months or even 6 months? So now a lot of those people are scheduled to come off their forbearances at the end of September 2021. So what does that mean? That means we're probably going to see more homes come onto the market at the end of September, and more inventory, meaning more homes for sale, decreases the demand of homes for sale, and that's factor number 2 that hopefully will help soften the prices of homes just a little bit. Now, it's not going to be a dramatic crash. It's not going to be an all of a sudden drop. Those things can happen, however, that is not what we're anticipating. So you guys keep your eye on it, and we'll see what happens with home prices. Most mortgage brokers that I speak to, the people from the bank that give you or me a loan to buy a home, they anticipate that interest rates are going to rise about 0.5 point throughout the year. So that is the percentage you could most likely see to increase over the course of the year, unless if something else unforeseen happens. And what we learned from last year is that everything can be unpredictable. This time last year, like June, July last year, we thought we saw the height of the market and home prices were not going any higher. However, this year compared to last year, home prices have gone up by 18%. That's a big increase from already high home prices. So just recapping briefly, you guys, a lot of people are going to be coming out of their forbearances and starting to sell their homes because they feel more comfortable. They feel more comfortable with people coming into their homes due to the pandemic. Another thing is that people are going to start doing short sales in foreclosures. Now, what is that? Short sales are when people sell their home, but it's not a fun sale. They don't sell it to make a profit and then buy a mansion in Arizona or someplace. They sell it because they need to call off the debt with the bank, and they basically more or less either profit very little or lose a little bit of money and basically break even when they sell their home. That's going to happen. People who are looking at that just went into forbearance and stopped paying for 12 months. Another thing that we're going to start seeing are most likely foreclosures, which are unfortunate when people lose their home to the bank. Now, we had zero of that because there's been a moratorium on foreclosures, and also because, like I said earlier, simply people will be going into forbearance. That's why we've been seeing an unnatural market. Not only has this real estate market been high, it's been unnatural. You see foreclosures and you see short sales happen, even in Beverly Hills, even in Brentwood, in the biggest, most luxury neighborhoods. Every now and then you see a foreclosure. I don't know if you guys saw that show on Hulu, The Donut King. That guy was a multi-millionaire. He was worth $40 million. He bought a huge mansion in Orange County, and he had a foreclosure as well. So foreclosures are a natural occurrence in the market. They have not been happening for more than a year. Another quick update is that eviction moratoriums are expected to extend until October 3rd. There's been a moratorium on evictions. People cannot get evicted if they've had a financial difficulty due to the coronavirus. Now, that doesn't mean that people can just simply stop paying rent and never pay it back. That money is expected to be paid back. However, people cannot just be thrown out into the street due to financial difficulties from coronavirus. And so that extension into October 3rd, the reason for that is because they said they've been seeing an increased number of coronavirus infections, and they don't want people to either go out into the street or to share housing with family members and friends and have multiple generations, multiple people in housing, because the more people living closely together, the more likely we're going to see more infections. Your final update, like I said before, interest rates are very low. And to be a little more detailed, currently at the making of this video, interest rates are 2.75%. That is incredibly low. That's part of the reason, like I said, why home prices are so high, because people can borrow a lot of money to purchase a home. Well, there you have it, guys. Will home prices go up or will they go down over the next year, especially if interest rates go up? Please let us know in the comments down below. I'll see you guys next week for next week's real estate market update.